Hi, good morning, folks. So, I actually just did an entire recording of the briefing while my mic was mute. So, hope everyone's having a better day than I am. First thing on the docket. So, because of that, like, let's I'll try to just get this on really quickly. So, first things first. Fed minutes. So, pretty much a reiteration of the Fed May meeting. We are expecting a zero point 0.5 hike each meeting to then uh, with further rate rises imminent in a way. So why aren't markets freaking out or just reacting super strongly to this? Well, this is because markets are forward looking and we have pretty much been expecting this and markets have been trying to price this in. We're seeing the Dixie just holding, seeing support here coming on Dixie at 102s, and as you can see here, nothing entirely too crazy. This is a daily chart on the E-mini S&P futures, and as you can see here, just nothing too crazy going on, but it would be pertinent to see that we prices are still capped at under 4,000. We do have this support trend line that is forming over here from the low of the 20th of May. So a break below that, we can probably see 3900s and the double bottom here get retested on the way down. Um, at the same time, we can see euro as well, lining up with that 5th of May. Let me just show you guys here this 5th of May low here, which has capped the Dixie for pretty much the week. Yeah, and it lines up with this 5th of May high at the top of this May range on the euro. So this nice support trend line that's here from the low of the May 13th, just nicely, comes up over there. So we should see some buying going on here, but if we don't and break below and buyers are unable to bring this back up, it will be pertinent to see the Dixie then reclaim that 5th of May low highs, 5th of May lows, and the euro could potentially, trade back into this range, looking at 0.06s, just handles with, at 0.05s to be this next real level of contention. If you do trade back below, if it does get down here, it'll be way too cheap for the euro considering the ECB stance on raising rates. So crude, this is also the other thing that I brought in, which is pertinent to note, is because, you know, there is a shed by uh, Eddie today that global stagflation is, incoming. And this is due to the fact that we've seen, the second largest economy in the world, coming up with fastest 2-year contraction in manufacturing and services numbers and signaling this huge shift you know towards the downside on global demand. And what that does is that, okay, I've made a video on stagflation before, so go back to that if you're asking what's up. But basically, due to this fact, so yesterday Bob Prince from has said that, okay, we are on the cusp of stagflation, and today, Eddie's pretty much really explained in the most effective way on why that is. So, but crude prices are holding to the highs here, and you would be questioning why, and it's due to the fact that you know I can bring up all the other stuff, but pretty much Aramco CEO said today, he's confirmed that he doesn't see a need to, go gung ho with increasing supply, despite due to the fact that we have really tight supply. Spare capacity is only at about 2% of global inventories, and any investments there's already lack of investment into facilities, and then um, even if they do come through, it would take these investments a while to actually, be able to produce enough crude to effectively, swap the balance of supply to demand. So any fears of lack of demand, is not too serious to him at this point due to this fact. There's not enough crude in, supply to basically cause this market to completely tumble down, but it could potentially be erratic. But we see it holding above this high of the 24th of March over here. A nice triangle now being formed over at this level to try and hold, converging on the 110s as support pretty much to see whether or not we trade above or trade below. This support trend line down here marking this $100 mark, in my opinion, would be really important. So we can see it's been pretty much this, I can't come up with the word now, really, to be honest with you guys. An inflection point, yeah, throughout March to today. So if you do get a retest over on this area here, I would surmise it would be a brilliant buying opportunity, but I wouldn't hold my breath if I didn't say that, okay, if you just keep holding above here and we continue on, then I wouldn't stand. There's a saying we have where you don't stand in front of a moving train or you don't try to catch a falling knife. And that was obviously on equities, which we've been seeing a lot of pressure going into the tech space because there's more investments. Apple Pay is increasing salaries, but we're not making more stuff because there's no one really to buy them. So we've seen GDP for China, GDP readings forecast for China just get completely, not completely, but cut from major banks. We had Goldman Sachs making a case for a bear market in the Chinese real estate space. So all in all, it's a pretty bleak picture in terms of growth, but we're traders, so our job is to see where the market wants to price things in. Have your lines and sands, and plan your trade your plan. All right, and this is not investment or trading advice. This is just me giving you the daily briefing. Cheers.